Hello, my Teaser King family. Well, what a good day yesterday. Silver 38.42. So not only did we break 36, we then got to 37 and broke that and didn't just get to 38, we got to 38.42. So what that means, well, we know that we know that it's price fixed. Just a second. All right. So we know it's price fixed. We know it's done by options. We know it's Eddie Murphy. We've seen trading places. I showed you a little video on it. What it is, it's a bunch of bullshit. It's a paper market. It's got nothing to do with physical gold. So if you're holding physical gold, it's worth 10 times what the paper market's worth. Easily. Because this is just done with options, which are fully diluted, heavily inflated paper, gold and silver. They only use 4% gold physical and 96% bullshit paper. So the price here cannot be real. The normal free market price is you have something, you sell it. You go on eBay. You go on eBay and, well, you go to Switzerland, right? And they have this in the gift shop. And this was, I think, 10 euros. So you either buy it or you don't. If I buy it, that's the price, 10 euros. That's what they can sell it for. If nobody buys them, they lower their price. If they run out, they probably raise their price to 15 euros. That's normal. That's what happens. Sorry about that. Just cleaning up. That's just what happens. So that's how you get a normal price of anything that's being sold from the seller to the buyer. That's what happens at the grocery stores. That's why you see sales. Nobody wants to pay for it. My dark chocolate at Myers went from like 2 something to 4.70. I basically tell them to fuck off. I'm not paying 4.70. All of a sudden, it sits on the shelves. All of a sudden, it's 2 for $8. They're down to $4 a candy bar. I don't know if it's really a candy bar. I guess it's a dark chocolate bar. Let's call it that. So it's 2 for $8. Why is it 2 for $8? Because it's too expensive. It's over the market. How did we determine that? Nobody bought it. Oh, you mean we don't use options and all this bullshit paper stuff that dilutes it? That's all just made off. See, that's the thing. And the banks have certain spots where there's new options. So like at 36, then there's a lot of there was a lot of selling. And then would go back to 35. And then there was a lot of buying at 35. So it's all bullshit. It's all fixed, right? But once you break through that, so there was one at 37. And once it hit 37, it's supposed to go back down. Well, it hit 37 and it went down. It hit 37 and it went down. Now it hit 37 and there's nothing left. And then it went up and up. and we got the 38.42. And the thing is, we don't believe there's any blocks at 38 as we went to 38.42, and now we don't believe there's any blocks higher. The blocks were in at 36 and 37, but they didn't block 38. They didn't block 40, and there shouldn't be any blocks till at least 50, and it should go all the way to 100. Yeah, good morning. Good evening to you, I think. You're a little bit. Your time is a little different than our time. Right here, it's noon here, and it's probably midnight for you or something like that. India, Pakistan, it's about 12 hours. I hope you're well. If you have questions, please feel free. But silver hitting 38.42 is huge. So all the paper booby traps that were in, we blew through them. And that's why it should go all the way up to 50 and then up to 100, because the demand is there to buy physical. There's nobody selling. Nobody in the right mind is selling gold or silver. You're accumulating it. You're collecting it. I hate the term stack. It's not a finance word. So we're collecting gold and silver, and we are it's itchy. We're buying, but why would I sell it 38.42? I bought some of the silver at $20. I'm not profit taking it at 38. I'm not profit taking at 100. Maybe at about 500, I might start profit taking. But as long as there's demand there, if you have demand, price has to go up if it's physical. It won't go up in the paper world because they will short it. That's the sellers are the paper world people. But we don't care about that. We're doing physical. We want to buy the silver, buy the gold coins or bars. So it's really weird that people don't understand this fact. Next target gold 3,400 up or down. Oh, it's up. Next target gold is 4,500. It's always been. As I'm saying, with Basel III, it becomes a physical market. If they short it, they got to pay the people who want to take delivery, like China. And they don't have the delivery. So this should just keep going. I guess they'll try some derivatives. It's really stupid. I guess you can profit take paper-wise, but who the hell would do that? Anybody with a brain who knows what they're doing is buying physical and watching it go up because you can't get inflated and you can't get burnt. They can't take it from you. Like Attack on Wall Street, the guy has 60,000, or any of these movies. The banks or the Wall Street banks just say, "Hey, we're deleting it. We're cutting it. It's a D note. It's delisted," because they're all losing their ass on it. Well, that won't happen in physical gold and silver. So we will see. Anyway, yeah, you can put a $4,500, $5,000 target on gold. Silver is $1,000. So it'll now, I think that we've got to 38.42. I think we can see I think we can see 50 very soon, and then to 100, because the banks aren't going to keep fucking around with these shorting the derivatives. I think they're losing their ass. Only an idiot would short something that's highly in demand. It's highly in demand because of bricks. So keep that in mind. And once you get rid of this, so you got to realize in a normal free market, you got a Rolex watch, it's worth 50,000, and demand drives it up to 100. And the used Rolexes are better than the new ones because the used Rolexes you can have right away. The new, if you were to go to a jewelry shop and buy a Rolex, it'd take you a year to get it. You don't want to wait a year. You want it now. You can get a used one now. So that therefore demand's higher for used, therefore price is higher. But you know what you don't get? Price dropping. So if it goes, you got a $50,000 Rolex and all of a sudden demand because it's used and you can get it right away. Now it's 75,000. But what you don't get, nobody's selling them at a loss. You got a $50,000 Rolex, you'll take 75,000 for it, maybe, but you're not going to take 35,000 for it. This is the point of, and the same thing with Mantle cards and Tom Brady cards and all that. You're not really going to take them lower. You know, why would they go down? You're only going to sell it if you get a better offer. So why would gold and silver go down? If gold's 4,500 an ounce, why would you sell it? Why would you sell it at all? But why would you sell it for less? Okay, 4,500, I'll sell it for 4,500. I'm not going to sell it for 4. But COMEX doesn't even take into account sales. They only take into account options, derivatives, shorts. That's what drives the price down. It's not even real. It's some fantasy bullshit of COMEX. It's paper. Like I show you trading places, they sell it at 142 and they buy it back at 26. Well, how did they, because of the crop report. It's really a stupid movie because it only shows you can sell first and then buy. But really, if you're sitting there and you're going to buy orange juice and your crop report's coming out in 10 minutes, why would you be buying it? Now, the Duke and Duke guy bought it because he thought there was something there. If you're telling me everybody else bought because he was buying, I got a hard time with that. I give people more credit of having brains. That's like everybody betting on St. Louis the Cardinals today, and you're going to bet on them just because everybody else is betting on them. That's what Bitcoin is. Why are you buying it? Because everybody else is. I mean, you got idiots involved. Or the Green Bay Packers. You analyze the game because you analyze it. And if everybody's betting it, but you like Minnesota, you're not betting on the Packers. So why would it go so high? Is it just a frenzy because the one guy was buying, they all bought? But then it started selling. Why did it go down? They sold first, and everybody was buying into the sell. They can't just sell. Therefore, why did the price go down? I mean, it doesn't really make any sense. Pat, how are you? How's Singapore? How the hell is the Chinese treating you? So, as I'm saying, a good day for silver, 38.42. And I think now we go 50. I think we broke that 37, and we broke it real quick. We weren't at 37 much. I sent my friend a text. I'll show you at 37. So at 9:12, I say silver's at 37.75. A half hour later, it's at 38.22. So it went up 50 cents in a half hour, and as I show, it ends at 38.42. So we're at 38.50. It didn't get stuck at 38. It did get stuck at 37 a few times. 38.42. Next week we'll probably be 40 and just keep going. We'll probably get 50 cents a dollar, and then gold went up $38 to 33.55. So I'm waiting for silver to do that. Let's see a $10 silver day. And then you'll never see 30 again. And it's you'll see 100 very quickly, which is what we're all waiting for because we all bought a lot of silver because it's cheap. but it's the same as gold. It's real money. It's very limited. It can't be printed or counterfeited. Pat, short squeeze and silver is underway as the physical is running out at the LBMA. Well, the physicals run out at COMEX. There is no physical there. They owe $30,000 to people who have already shorted, who want to take delivery, and they don't have it. But I think this is something more than a silver squeeze. There is no silver left. They might have a little bit, but who knows whose it is? Is it an ETF or what? But I think this is more than that. This is Basel III, where they have to cover. You ask for delivery, they have to deliver. I think that's what a lot of what this is. And the fact they don't have silver there, or at COMEX has nothing. The Russians, the Chinese are going right to the mines, and they're buying the silver right from the mines. They go in, they go, give me 100 tons, and they send it to Switzerland to get turned into bars and coins, and then it goes to China. And that's how they're buying their silver, because even there, you can't get it. All right. So supposedly the price of silver is $38.42. You can't buy it for $38.42. I can't if I go to my store, it's $40.42. If I were to buy a bunch, I can't get it for that price. If I wanted to get it from COMEX, if I was a big bank, it would probably cost me $50. So this $38.42 is not even real. But it's the momentum, it's the blocking. The reason it went down was the options, which are gone now. Because if you're stupid enough to do a short with heavy demand, you have to cover if they ask for it. So if they say, I want to take delivery of the gold or silver from the options, you have to give it to them now. That's what Basel III is, which they can't do because they don't have it, or they're going to pay $75 an ounce for it. Because if I have it, I'm not selling it to you at 40. We might see 38.42, but nobody here is selling it for under 100. You'd have to be out of your mind. So how can they cover if there is no more physical? See, that's the point. They can't. They have to go out and buy it from the Chinese mines or from a miner. That's where they have to get it. That's what jumps the price up. And they got to pay $60, $75 an ounce for it because the miner's not giving it away at 40. The 38.42 price is just bullshit. It's not a real price. It's a Eddie Murphy price. It's just them doing these paper options. That's where the price comes from. But when you take out, so as I show you my Canadian club, the price comes when somebody buys this from me. That's the real price. So if somebody offered me $100 for this bottle, I might take it, I might not. It's a 12-year-old, so it's a very, very limited Canadian club. You can see 12 years old, but that's 1997, 12 years. We're 38 years past it. This is really a 42-year. So, but the real price comes from me selling it and you buying it. That's the real price. Well, when you're not selling and buying gold and silver, you don't know what the real price is. So my point is the real price of silver is here. The COMEX price is here. We don't know what this price is. My guess, $1,000. Because it's needed not only for military, it's also needed for money. And as more and more people understand that this has no value and this has no value, and they start realizing the values in gold and silver, they're going to all throw this away to buy the gold and silver, which the demand's going to be huge. And if it gets to a physical market, a real market, a Canadian club market, then it keeps going. Then it goes until there's no more buyers. And at this point, that's going to be a very high price for both gold and silver. And that's the problem with the paper world. They're controlling the price. It's price fixed because they buy and sell options. Yeah, I'll buy it at 38.42. Okay, I'll sell it at 38.50. I'll buy it, Well, look what happened yesterday in gold. All right, all of a sudden it's 33.65, And somebody decides to sell his paper options, and it goes down to 33.52, and then somebody bought it, and now and you can see it ended about 33.56. But these are all bullshit. These are all options being sold and bought. These are all meaningless prices. None of these prices are real. They're all fixed. They're all based on what they determine it on an option without any physical gold, 4%. So you don't know what this price, 33.56 for gold, is not close to reality. The real price is here. My guess is between 10 and 15,000. And here's the COMEX price. This is not a real price. This is done by this is done Eddie Murphy and his orange juice. So it ends up where he sells it, and why it drops, I don't know. Why people would buy it before the crop report, I don't know. But they did, and then everybody sells out of it at 142. You just bought it at 120. You're selling out at 140, driving the price down to 26. Is 26 the real price for orange juice? Well, it opened at 100. Was that the real price? Was 142 the real price? None of them are the real price. They're all bullshit prices, because the real price is going to the grocery store and seeing the carton of orange and going, that's a good price, or that's too high. And if they can't sell it at the grocery store, they put it on sale. So that's how you come up with the prices. Like I said, the dark chocolate was $4.75 for the bar. I've been paying $2.50 for. I told them to fuck off. It was $2 for $8. I still told them to fuck off. Why should I pay $4 a bar for it? No, you're still too high. As they can't sell their inventory, the price will come down. And I was talking to a lady there, and I says, well, you got to own gold and silver because the dollar's worthless. And she says, well, how do I bring gold to a grocery store? How can I buy stuff with gold? And I go, are you related to Bobby? I mean, it was like some old, just a white 70-year-old, grandma or something. And I go, well, if you hold dollars, you certainly won't be able to take dollars to the grocery store. I said, but the gold will hold its value, and then you could trade it in for dollars, and then you use your credit card and debit card, whatever. I mean, you don't bring $100 of this to the grocery store and use it. You're using your debit credit cards. So that's kind of what I told her. It's like, but you don't have a choice, and it's worth X amount anyway. The dollar's not worth anything. The gold keeps going up. Look at the gold went up $40 yesterday to 33.56. It still should be over 3,500, and I think that's where we're headed very soon. But that's going to keep going up. You're not losing value in it. That's why you own it, because you lose value in the dollars. You don't lose value in the gold and silver. And that's why silver will move, because it's real money also, but it's a lot cheaper. $38 for real money versus $33.60 for gold. People will run to silver. But there's more silver than gold. But if you want to buy a house, you buy gold, and you can use a couple ounces to buy it. I keep saying, if you're going to buy a house, you're not going to take out a mortgage. You're going to use the gold and buy the house. Just like you go to the grocery store, you buy the orange juice. You don't, take out a mortgage for it. So you got to realize that's what's happening. It's priced in dollars, which aren't worth anything. This is not worth anything. This has lost, to me, 100% of value, but let's say 99% of its value. So it takes 500,000 of these to buy the house, because this has no value. Gold, on the other hand, will knock the value of the house way down, but it'll be priced in gold. So my example is Zimbabwe. $1 buys you 30,000 Zimbabwe bullshit dollars, but in the gold bag zig, it's 10. $1 buys you 10. And I don't know why the gold isn't worth more than the dollar, but look at the difference, 30,000 to 10. Well, so look at a house. A $300,000 house is going to cost you $100. Maybe not even an ounce of gold, but you're going to go right to the seller If you're selling a house and I come up to you with gold, you're gonna, I'm your new best friend. They take it and off they go with it. Here's your house, and and you pay them the gold. So there won't be brokers and there won't be interest rates because you won't. I'm going to pay you in full. So how long can they cover if there's no more physical? Not. That's it. It's gone. That's my point. The silver is gone. Nobody will sell it to them for any price. Exactly. Well, eventually there'll be a price that you can sell it for. There's always a price, right? So they might need to come up with $200-300 for an ounce of silver to cover. They'll probably use some bullshit to try to get out of, oh, we're deleting it, we're delisting it or whatever, and then COMEX will be gone if they start defaulting, because you're defaulting to Russia and China and probably some mafia people. So it's not really a good thing. So they'll have to come up, and you're talking tons. You're talking 5,000 tons. You're not talking, let me go to the store and buy 50 ounces, right? The public is completely unaware of it. Nobody owns any silver. Well, except for us. There's a lot of people I know in our class who own silver. I've talked them into it. So don't say that. There's more than you think, but it's not something. How do you advertise it? Yeah, I own silver. That's like saying, yeah, I got 100,000 in my bank. Nobody's going to tell you that, but it's not like you don't have money in your bank. So, like, I have silver and I'm not selling it. Oh, it went up to 38.42. I'm not selling it. I got a lot of sports silver where it's like a Mickey Mantle or a Derek Jeter or Roger Clemens or Bobby Orr 1 ounce coins that I got. Highland Mint came out when we were collecting baseball cards in the 90s. They came out with Highland Mint coins, and I always liked coins, so I got about 40 of them. I paid $16 for each coin, and I don't think silver was $16, but it was like you paid for the coin and then you paid because it was Bobby Orr on it or something. But I'm not going to sell it at 38. I've tripled my money, right? Or no, I 2.5 times that, 16 to 32. But I have no. Why would you sell any of it when you know it's all about to go up? This is what we've been waiting for. And I told you I can't give you a date, but I can tell you it's going to happen. Mahomes is going to win the game, but I can't tell you. I can't tell you how it's going to happen. I can only tell you at the end of the game, Mahomes will win it, right? And he wins it, and you don't. And each game's a little different. You can't give a time because you don't know. But the way it's going with these tariffs, as stupid as Trump is, the dollar's being wiped out. And I don't know if his play is to get on a gold-backed system by wiping the dollar out, which you don't need to do. Just go on a gold-backed system. I don't know what he's doing. He's destroying America and our whole economy. And BRICS is sitting there loving it because they got all the gold, they got all the silver, and they're just laughing hysterically. Awis, thanks, good work. No, this isn't work. This is fun. This is my passion, so it's not a problem. You're welcome, and please feel free to ask questions, comments, whatever you want to know. But my target for gold is at least 25,000, and my target for silver is at least 2,000, probably 3. Because what I'm factoring in that most people aren't smart enough to factor in is the fact that the frenzy at the end of Titanic, when people realize the boat's sinking and they all have to get into the lifeboat, that frenzy is what I'm factoring in as people realize the dollar and the euro and the Swiss franc and the yuan and the yen and the ruble and all these currencies are worthless, and your only out is gold and silver, which they won't tell you. Only I will tell you. And that frenzy, when everybody realizes they need it, is really then you're gonna really see high prices. Um, I don't get Bitcoin; it's not real at all. It's priced in dollars, which means if the dollar goes to zero, Bitcoin is not real. Gold is gold. You still have the gold; it'll be worth a ton. But what will Bitcoin be worth? Nothing, because there is no Bitcoin. It's not even real. It's just all bullshit. It's Madoff. It's like saying Madoff was real. Um, you know. So anyway, I wouldn't say they're completely unaware of it. I would say 98% of the public is unaware of it. There's about 2% of us that I know in Germany they're aware of it, because when I was in Berlin, China's been buying, Russia's been buying, the citizens have been buying gold. So more in the U.S. because we use credit cards and debit cards and everything. I was looking into flying to Vegas, and so I checked Spirit yesterday. I know it's reasonable price, but oh wait, you want to add a carry-on? They give you this little luggage. I don't know what it is, but if you just want like my gym bag, right? A little gym bag to put a few things of clothes in, toothpaste and stuff, it's $71 each way. So the real price is not like 200, it's 270. Sort of like the resort fee. Well, how the hell do you want me to travel without luggage? And that's not even a carry-on. It's not the little luggage you pull. It's just the gym bag is $71 each way. So now I got to weigh, is it worth it? In Vegas. So let's switch to Vegas, but I will answer gold. And so we're not done with it yet, but just to bring up Vegas, and we're going to bring up gambling. So it's very stupid because was the Southwest? No, it's Spirit. Do they think we're stupid? Just fucking mark the price with the luggage included. And if you're gonna bring a big luggage that you got to check luggage, all right, add $25 to it. But don't sit there and give a ticket. Oh wait, but if you have carry-on luggage or the overhead luggage, oh well, that's going to be 72 more. Well, then fucking just price it at that. I don't know what they're doing. It's just really stupid. Just charge what you need to charge. I hate the a la cartes. When I go to like a steakhouse, I've been to Morton's, and it's like it's been a while because I cook better than they do. So you go to Morton's and it's like $30 for a steak, or it used to be. And then, oh, you want a baked potato with that? Oh, you want anything with that? A baked potato or fries or salad? That's all a la carte. Are you kidding me? Just fucking charge. I went to Texas Roadhouse with my friend, and you got your steak, and it came with two sides. So the price is, $20, but you're getting the two sides. So you don't need to order the sides separately. And that's kind of what it is. Hey, Mr. Crazy, where have you been? That's hilarious. Be cheaper to go shopping when you get there. You're not kidding. Or figure out there's a very small thing you can bring on. So how much, the better way, Ryan, is to wear 4 shirts and put on 2 pair of shorts and then put on your jeans. You don't need 2 pair. You're just going to wear tennis shoes, and then put your toothpaste and stuff. Maybe you go to Target and buy it there. Yeah, that would be it. But so you just wear. I do that once in a while when I fly. I'll put on. I don't have any more room in my bag. I'll put on like 2 sweatshirts over my shirt just so I don't have to pack them. There was weight limits. So when Carmen went back to Romania, she was staying with me for a few months. Uh, we just went out to the curb and I gave the guy like $30 and he put it through. In other words, there's a weight limit, right? We're over the weight limit. It was going to cost her like 100. So I go see the guy handling it and he's weighing it and here's $30. And all of a sudden the weight was fine. It was not a problem. And she got it when she got there. She got it. So yeah, that's probably a good way to do it, Ryan, is to put just wear all your clothes. I mean, really, what are you taking? Clothes and like I said, a toothpaste, maybe mouthwash. You just put in your pockets. You can carry food on. You just can't carry like water. But you can go to Burger King and grab 2 hamburgers for the plane. They'll let you on with food. They just won't let you on. I guess you can make a bomb with water, but you can't make a bomb with a hamburger. So I saw that for $70. So maybe that's a good idea to just wear all my clothes on the flight, and then and when I get there, just change them off, and then wear them all back, I guess, or figure out, or give maybe if you give the lady at the gate $20, she won't care that you're carrying it on, because nobody knows. I mean, nobody knows if you paid the $70 for the carry-on or not. But if you give them a 20 or maybe a 40 to say, here, is my luggage okay? Oh, sure, it's fine. Everybody will do that, as we know. I mean, that's who wouldn't, right? Oh, you want to give me 4 because it goes right to them. Funny, I was thinking that also. Yeah, I mean, the question is, will it cost you? So if you wear your clothes on, will it cost? Well, it's $70 both ways, so it's $140 additionally. So can you go to Target and get some clothes and I guess your toothpaste, but you got to bring the small one, and your toothbrush and your razor. Well, I don't know if you can bring a razor, and your little stuff put in your pockets or whatever this little carry-on bag is. There's like it shows a little pouch, but it's not the gym bag, right? It's a very little, I don't know what you put in it. But I would want to bring my computer. So that kind of fucks that up. I'm not going to buy a computer there. It'll be more than $140. But yeah, I mean, because food you're just going to get at the hotel anyway. So yeah, it might be a good way to do it. I can wear 3 pair of socks under my shoes when I travel. Interesting. Yeah, it's good. It's a good. This is why we're critical thinkers here. We always solve our problems. Um, but yeah, that's what we're looking at. Anyway, so the planes, there's only a couple of nonstops. It's like 4-hour flight from Detroit, and I don't know. So food for thought now of not taking my gym bag and paying $140 for it, because it's $71 one way. They're fucking insane. Just fucking add $50 to the price both ways and say I can bring on a carry-on. What is the difference? Gas hasn't gone up. I still go fill up my car. It's still $2.90, $3.10 for gas. That's not killing you. So I don't know what it is. So I'll have to see. I'm still debating. Don't really want to go to Vegas because it's just priced way out of whack and everything. So even going to Caesars, I got to pay $150 to watch a sports in the sports book, and so I don't know. I have to think about that. So let's get to what is gambling, right? So How do you win at gambling? Well, you got to understand. You got to understand gold is gambling. You got to understand this is gambling. Anything that involves risk and return on investment, risk is gambling. You have to understand that, and your goal is to get the biggest return for the least amount of risk. That's economics. That's what you're looking to do. That's the key to it, right? So if you we do it in football all the time. Well, I can bet on Jacksonville, but they're really bad, and I don't know if they're going to play well or not. So we go to Mahomes and we go, "Wow, it's the same risk." There's no more risk betting Mahomes than betting on Trevor Lawrence. But the risk is a lot better with Mahomes. We know he's going to win the game. We don't know what Trevor Lawrence is going to do. Probably 3-4 interceptions. Dak Prescott, Caleb. Everybody really quick talking about Caleb. They're sitting there going, now he's got an offensive coordinator, Ben Johnson, blah, 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 blah. He had fucking Lincoln Riley at USC, and then he had fucking Cliff Kingsbury, the coach of Washington, who was the Arizona coach, as his offensive coordinator. When he got fired from Arizona, he was the offensive coordinator at USC with Caleb. And you're telling me Caleb, between Lincoln Riley and Cliff Kingsbury, who's offensive gurus, he sucked his second year. So all of a sudden, Ben Johnson's there. He's better than Cliff Kingsbury and Lincoln Riley, or he's such different that now Caleb's going to get it. You got to be out of your mind. Caleb sucks. That's all there is to it. He's a little shifty guy. He's kind of quick. He's not a quarterback. He's quick. Another wide receiver type that is, you got him in the wrong position. But Lamar should be a wide receiver because he's fast. I don't think Caleb's fast. But it just shows you, if I bet Caleb versus Mahomes and Burrow and Josh Allen, I'm taking a whole lot more risk if I don't bet on those three, Burrow, Allen, and Mahomes. My risk is much higher, but my reward isn't. It's 11-10 on a teaser. It's the same if you take Cincinnati, Kansas City, or Chicago, New Orleans, and Miami. It's the same odds. So what we're looking for is to get the better risk for the same reward. It's not like if you bet Caleb, it's even money, but if you bet Mahomes, it's 12-10. No. It's 11-10. Whoever you bet. So your reward is the same reward. It's the same. It's a much greater risk with the same reward. And that's what I do. So we are betting on Alabama and Georgia because we know what they're going to do, but we don't know what Purdue's going to show up with, or Cincinnati, or UNLV. We don't know what they're going to do, but we know what Alabama and Georgia are going to do. They're going to show up and they're going to kick their ass. Ryan, I just read something that they are going to put gamblers into some type of tax bracket. Didn't read the article yet, though. Well, they can't really. The problem with trying to tax it, how do you know what they do? In other words, if I'm playing poker, I could pull out $500 and cash out $400. I've really lost $100. How do you do that? Am I going to fill out a 1099 when I sit down and fill it out when I get up? The only thing they tax you on it now that I know of is the slot machines, or maybe video poker or something video. But you don't know what I started with, so you can't tax me on winnings because I can just say, hey, I started with 1,000. I cashed out 900. I didn't win 900. I lost 100. And they have no way of knowing what you started with and what you won. So I don't know if it's going to be a general gambling and what it is. Is it sports betting? Are you going to tax football? They're pulling out everything to pay off the $37 trillion debt. Well, we can tax the gamblers. Well, most gamblers lose, so how are you going to do that? But Very difficult to tax poker unless it's like a tournament, with Doyle Brunson and you win, $500,000. You win $1 million. Well, that's pretty much, he won $1 million, and he put in. You're at the World Series of Poker. He put in 10 grand, and he won $1 million. So you pretty much know in that situation. But in cash games, you have no idea. You don't know what they started with, and you don't know what they ended. Is it's profit or not profit? So you can't really tax it. You can't really tax sports betting. Sports betting, what you tend to do is like when you go to the track, you pick up losers. And, so you can have the tickets, but how does it get registered? They can't. The way they get you on tax is sort of like if you have money in the bank and they give you $1,000 on interest. Well, they give the IRS that little form, 1099, whatever, that you've got $1,000 of interest income. That's the only way they can tax interest income. And fortunately, with gold and silver, there is no interest. It's all nobody knows, and that's the beauty of gold and silver. But they don't think anybody's in it, so they think. But the Bitcoin people, you watch, they're going to get them because they can monitor everything you do in Bitcoin. You thought it was a secret; it's not. So you're going to start getting 1099s on your Bitcoin, especially if you try to sell it at 117. Good luck doing that. But I don't know who the fuck has 117,000 to buy a Bitcoin when you could buy 50 ounces of gold. Are you out of your fucking mind? Gold's about to go 10 times. Bitcoin, I have no idea why it went up. I believe it's because China is now allowed Bitcoin where they weren't going to. Talking to my neighbor, the loud one, I met him on July 4th, and he says it's all CIA code. If you look at the code in Bitcoin, it's CIA code. So I guess the CIA with the Red Chinese created Bitcoins. You want to play with them? Be my guest. But I think they'll start taxing you, especially if you start pulling money. That's easy. But gambling, I don't know. Really, it can't be poker. It can be slot machines. It can't be poker. Can't be sports betting. I suppose if I bet, $1,000, $1,100 to win 1,000, and I win, I made $1,000 and I return the ticket, but you don't have ID with that. Caesars isn't going to sit there and go, oh, let me see your ID. Oh, okay, Howard, we'll 1099 you the $1,100 the $1,000 you won. So there's no tracing that I bet it and then I won it versus my losers. There's no track. There's no name on it. You're just giving them $1,100 cash. If it wins, you get back 2,100, the 1,100 plus the 1,000. But how do they know who to give it to? You're not giving them IDs, and they're not going to sit there with a line of 50 people, and they're going to start taking IDs down and tracking it. Or when you cash it, but they don't have the time or the energy to do that. So I don't know how they're going to really tax. They tax lotteries because when you get paid, then you show ID. But be careful what it is. I don't think it's a general. If you go play roulette, you stick $100 down, you bet on 33 and it comes up and they give you the chips and you walk away. There's no ID. There's no forms like at the bank. You made $1,000 in interest and we're going to send that form because we have your information at the bank. So I don't know how they're going to do it. It doesn't make a whole lot of sense. Maybe online gambling because you probably check in and so they might have your balance. So if you're on FanDuel or something, so maybe avoid that crap and go offshore, then they can't do anything. That might be the only way, but they have to know what you bet and what you won and what you lost to then tax you on it. Ryan, think maybe the online sites. Yeah, that's how I just said. I do eBay sales and anything after 700, I had to report. Yeah. Yeah, but that's That's what you made on. That's not what you made on it. That's what you sold it for. What's not included there is your cost on eBay. So if you paid, I don't know, if I paid $50 for this and I sold it for 100 on eBay, I didn't make 100. I made 50 because I did have to buy it, and I had to pay for the auction. So there's the buying of the inventory, and the auction price should offset most of that. Gold, all right, you paid 1800, which they can't prove, and I go on eBay and I sell it for 3500. My auction cost X, and okay, I get 3500 for it, but I paid 1800. So it's not all profit, and then the auction cost and the internet cost and my electric cost, all the costs that go along with going on eBay to sell it. So it's not just, oh, I'm going to get taxed on 3500. No, I didn't make 3500. I sold it for 3500. Welcome to accounting, but I don't really want to go there. Yeah, right. No, I know what you're saying, but it's a pain in the ass. But look how desperate they are to pay off the $37 trillion debt. I was watching Thomas Sowell today, and I almost fell off my couch. They he started talking that tariffs were a good idea, and I said this must be a spoof because Thomas Sowell is an Austrian and he's against tariffs. And so I just listened to 5 minutes and I got disgusted. Like, he doesn't think like that. With AI, who knows who's really going on? You got to be very careful with that. Anyway, back to gambling. So gambling is anything with a risk and anything with the reward. So on eBay, you're not really gambling, but if you're betting sports or roulette and all that, if you're playing the stock market, if you're playing Bitcoin, if you're playing just the bonds, anything to do with the dollar is a huge risk right now. The risk is, will it have any value left? You're not really gambling with the house because you actually own the house, but you are kind of gambling. If you go out and buy a house now for 500 grand, good luck, because it's going to lose. You're going to lose a lot of money in it because the value of the house will go down. So that is something that you are gambling with. So anytime you could lose money, anytime there's a risk, and there's a huge risk holding this right now, even your money in the bank is gambling. You got 200 grand at Chase, and you think, well, I'm not taking a risk. I get whatever, 3-4% in the bank. You're taking a huge risk that your money has any value at all, and that you can get it out because Chase won't give it to you. Look at Attack on Wall Street guy. He bought real estate trusts, so he's buying mortgages, $60,000 worth. He told the guy, I don't want, you guaranteed me 8 to 10%. Well, then why did he lose 60,000? If he got the guarantee in writing, he wouldn't have lost anything because they guaranteed it, which they didn't. But here he's thinking, I don't want any risk in the portfolio, which is why I kind of joke about that. I don't want any risk in the portfolio. And we'll get 8 to 10% in these real estate trusts. Well, he lost 60 grand. He took a huge risk he didn't understand. Anything in the dollar, anytime you're dealing with the banks, Wall Street, you're fucked. You have huge risks you don't understand. I guide you to gold and silver because there's no risk in the portfolio. They can't come and say it's worthless. They are not going to confiscate it. They might tax you when you sell it, but they're not coming into your house. They didn't come into your house in the 1930s. When FDR did it, he just went to the banks. And at that point, it's not like now. You didn't have a safe in your house, and you didn't have, or have it in a safe place, or at Egon's place in Switzerland. You didn't have it there. So you basically had, they went to the bank and pulled the gold out of your account. So they went into your security box and took it. But they didn't come into your house. So people are, and they did pay you. If you had 10 ounces, they gave you $20 an ounce for it. It was not like they stole it. They didn't just take it. They said, we're taking it and giving you, oh, it's $20 an ounce, we'll give you that. But they didn't go into your house. So, you really don't have much risk in that, them taking it. And you don't have to worry about the value because it can't be printed. It can't be inflated, which is printing. Yeah, you have a little risk, as I show you on eBay, these Chinese guys trying to sell an ounce of silver for $20. Wait a minute, they're going for 40. Now they're probably going for 41, 42 or more. Before it was 36. You couldn't find them for 36. They were all like $40. So at that point, you really don't have a risk. That's your only risk is, oh, I can get it for $20. Yeah. Keep thinking. Yeah, that's bullshit. If you think you can get silver for $20 for an ounce and it's 40. It's funny. I did buy my friend, she gave me $100 and it was $40 an ounce for silver, but they had a half ounce for 20. So it's the first time I ever bought a half ounce of silver, but it wasn't for me. It was for her. It was to buy the $100. And now she's got to be loving it. It's just gone up $4 an ounce. But that's where the risk is. Do you have risk in Bitcoin? Of course you do, because you don't even know how it goes up and how it goes down. We know in a physical market, we know if there's demand for gold, it goes up. If somebody's willing to pay more, the price goes up. That means there's got to be a lot of demand for it, which there is, or silver. Bitcoin, is there a lot of demand for it? Who knows? It's something worldwide. Apparently, China said you can buy it, and apparently there was demand for it. But what do we know? We don't know anything about it. And the fact that it's not real, that you can't hold it in your hand. I mean, at least a dollar might be worthless, but at least I can hold it in my hand, put it in my wallet. I can't even see Bitcoin. So it's very dangerous digital stuff because it can just as easily be gone. And I don't trust, I certainly don't trust Larry Fink, the Russian mafia, the Chinese mafia. I don't want to play with them. You end up losing. So is gambling risky in the casino? Of course, because of the odds. You play blackjack. The odds aren't true. It should be, blackjack should be 7-6 for a blackjack. I don't even know if it's 6-5 anymore. It could be even money for a blackjack. So you've got risk. You could lose if the dealer gets hot. I'd take you to back rack because you can bet on the dealer. There's bank and player. So you diversify your risk because if the bank gets hot, you bet the bank. Where in blackjack, you can't bet the dealer. But there's risk. You could bet bank and the player hits, and you bet player and the bank hits, and you lose. Anytime you can lose like that. So the only thing I really put you into where you really can't lose is gold and silver. That's the method to my madness. You go to Vegas, everything there, you have a lot of risk. The odds aren't right, and you could lose everything you play there. Even poker, as good as I am in it, it doesn't guarantee me winning. It's a risk. Somebody else, I got a full house, he has a higher full house. I got a pair of aces, he hit a set of sevens. So it's very risky. That's why a lot of times now I'm just buying gold and silver, and I'm not going down to MGM Detroit and playing poker there, even though I'll probably win 7 out of 10 times. I don't want to risk. I don't want to take the risk. I have no risk in silver and gold. Let me just go buy it. And because if I play poker, am I going to get a better return? Probably not. Look at silver. Silver's 38. Let's say silver runs to 50. I mean, maybe I do that in poker if I get lucky, but I know I can do it in silver and gold. Gold, I got at 1,700, almost 3,400 now. I can't do that at poker. There's a lot more risk. So you've got to understand there's the huge risk with the banks in Wall Street that you don't understand. You buy stocks, you buy Apple stock, you wake up and all of a sudden there's a tariff on it. And they're in China and all of a sudden there's a tariff on it. Apple stock drops. Google stock drops for whatever reason. Amazon, their stock, all of a sudden they moved out of America. Bezos just sold $2 trillion of his stock. Well, that's a red flag, right? Wait a minute. He's selling his stock. Why would the owner sell his stock? Or he used to be the owner. Why would he sell his stock unless he knows something bad's going to happen? Because he's going to make money if he just leaves it in there. So you've got to look at all the warning signs. Warren Buffett sold all his stocks, but he's an idiot because he put it into treasuries instead of gold. The guy has no idea. So you have huge risk in the bonds. Because how are they going to pay back? They owe 37 trillion. You're going to go get a $100 savings bond for Jimmy's birthday or something, and it's a 5-year bond, and the odds of Jimmy getting his $100 back are zero. That's the risk that you're taking that you don't realize. Banks, they don't have to give you your money back. You go give them $50,000. It's not your money. It's theirs. You have a credit on account that you have 50,000 there, but if they don't want to give it to you, they're not going to give it to you. And they could do. You watch Trading Places, and you're a heroin dealer. We don't want to do business with you. And he's bitching, I got 150,000 in there. They wouldn't let him have it. So if you do something wrong, you might not get your money out. Stocks, they don't have to give you the money either. Oh, I got all this money in Apple. Well, sorry. We need your money. As they start going broke, they're going to steal your money. So there's huge risk in stocks and the banks and all the gambling. Sports betting, we know there's huge risk there. I took Chicago and New York won. It's the risk on picking the winner. So as I was saying earlier, we're trying to get the better, take the better risk. That's what I'm studying a lot, is to find out the A teams and find out the Z teams and bet against the Z teams and take the A teams or the over teams. Reduces my risk of losing. That's how I win, is going after the less risky bets. So now in baseball, what am I looking at? I'm going to bet on Skubal, who got his ass kicked yesterday. Or I'm going to bet on Paul Skeens under. Or I'm going to bet on Max Fried or Chris Sale, who hurt his arm. So I'm staying away from the guy who's 2-8 with a 4.5 ERA, who could shut you out or could give up 10 runs. It's too much risk. And I don't get a better reward. Sometimes I do in baseball because you're dealing money line. So sometimes I got to give 200 to win 100, and sometimes it's 110 to win 100. I really am oblivious to that. I'm just going, I'm going to bet. I bet Skeens under, and I assume it's 110 to win 100. I did that yesterday, and I won with it. But I had Skubal, and I lost with it. So that's what you do. But you're trying to take the risk out of it by playing the best pitchers, assuming they're going to pitch well, assuming Mahomes is going to win the game and Burrow's going to throw for 500 yards and 5 touchdowns, and we're going to win the over in all the Cincinnati games. Same thing, Josh Allen and Lamar. That's where I'm getting the over. They'll both score. I don't know who's going to win, but I know there'll be a lot of points. So that's what I'm looking at, is getting the less risk that I can, because the reward's the same, especially in football. It's 11-10. There's a whole shit. And in college, there's 60 games. You just look for, that's why I rank the teams. It takes the risk out of it. Oh, I can bet Ohio State, or I can bet Texas, or Alabama and Auburn, and, certain teams, and there's a lot less risk. Other teams I don't know, or maybe that's why I look, they're not very good, but they score a lot of points, and they have no like Kansas. They score a ton, and they have no defense. Oh, we'll bet Kansas over. We did that a lot with Colorado last year, with Prime and Prime Junior and all the little primes running around. You knew they were going to score, and they did. But that's what we're looking at, because in football, the risk is the points, which we don't care about because we're betting over and unders. So I guess the risk of 2 high scoring offenses putting up and they make the total 68. That's your risk factor. And we divvy that up and go, well, so we tease it down to 62. Yeah, these teams, great offenses, great quarterbacks, no defense, not a problem. Where the Georgia under we did a couple years ago, we locked Georgia under 8-9 weeks. We won every week. They were constantly in 50-point games, and they'd win every game 33-0, or maybe 33-7, or maybe 36-7. It would never get close to the 50s. And they kept coming up with 50-point total, 54. What are they on, drugs? How are they going to get the 54? You can't score on them. You're lucky to get a first down on them. So that's why we look, and that's how what I'm looking at is my risk. And by clearing up the team into A's and B's and Z's and overs and unders, I can tell what I'm expecting, my expected outcome, which then takes care of the risk. My reward's the same. Doesn't matter who I bet, Ole Miss, Old Mississippi State, Pittsburgh, Penn State. It's the same risk. It's the same reward, different risks. And that's what I'm looking for. But I don't think the only thing I think that doesn't have a risk is gold and silver. There's really nowhere it's going down, and it's just going to keep going up once we get to a physical market. The risk was in COMEX, which is being blown up now. Basel III, thank God. So that makes it, you can see silver July 1st, it's July 11th, and we're already up to $38 an ounce from 35. So there you go after basically a week and a half. Okay, nothing new from Ryan. So that's how I'm thinking. I'm thinking of what's our best risk for our reward, and it's gold and silver, because there is no risk. I mean, there was with COMEX, they could just short it down. But now that BRICS came in, BRICS took the risk out of gold and silver because there's huge demand. So when COMEX tries to knock it down, BRICS is buying it up. And that ends the COMEX game, because as soon as there's, as I said with the Madoff thing, Madoff was fine as long as nobody asked for the money. New money come in, it'd pay the old people, everybody was happy, and it would just keep going until people, 2008, didn't have the money to put it in, and everybody was taking it out because their other investments were getting hurt, and they needed money. They needed margin calls or whatever they were doing. And therefore, once people took their money out, nobody put it in, the Ponzi scheme ended. And that's exactly what COMEX is. It's paper, so it's fine, but until somebody asks for the physical gold and silver. Once that's asked for, the game's over, because they don't have it. They're just playing a paper game. Now it's physical. I don't have the physical. I can't deliver it, and the game's over. Same thing. So your risk in Madoff was huge, but you didn't understand it. You didn't understand he wasn't investing, but you should have known the housing market would be the killer of everything, because everybody's losing money. And what happens is when you start losing money, you start selling your assets. So Attack on Wall Street guy is sitting there, and his wife's sick and he needs money. So what does he do? He goes to his real estate trust. Had there been 60,000 in there, he would have taken out 10 or 20, which is my point. When you need money, you go to your asset and pull it. And as I say, had he put it into gold, I think I calculated his 60,000 would have been worth 110,000 at the time, and he'd have been fine. He would have had no risk in the portfolio. His portfolio would have jumped up, almost doubled, depending on when he bought it. I mean, I'm assuming like 2006, it could have been 2000. Gold could have been $200 an ounce, and it was 1,100 in 2008, 2009. So the way you do everything is risk and reward. What is my risk? What is my reward? You do the same with girls. What's my risk in taking her out, and what's my reward? you know. Uh, that's that's the whole key to it. Um, but that's how everything is. Even going to a job, you get a job offer from GM now, I wouldn't take it because the risk is they won't be in business in a year. So what's your reward? Yeah, you get some paychecks for 6 months until the company goes out of business. So you try to go. I had an interview with this one company, and I said, "What do you like about us? The fact you're not automotive, because I know they're dead. Yeah, there's demand for cars. The electric cars are fucked, but there's demand for cars to a point, but it's getting so expensive. I'll just buy used cars. I don't need to buy a new car." Anyway, so that's what's going on. So in Vegas, how do you win? You understand the game. So I can win at poker, but I got to understand the players I'm playing against. Is he bluffing or not? And that's, you can just watch him. Can you pick up his reactions? Does he eat Oreo cookies? Does he look up at the TV? My favorite read is when when you're in the hand with the guy and he makes a big bet and he looks up at the TV. He doesn't even care about me. He's not nervous at all. He's got a full house. Every time he's got a full house. And so you just look up at the TV and he's not worried, then he's got a good hand. And that's human nature. So that's really what you're looking at. For poker, you're trying to understand your position and the opponent's position. And you're trying to figure out which one are you good or not, and what's the reward? What's the risk? Well, I don't know if I'm going to win, but it's only going to cost me 10, $20. I'll see it. If it starts costing me $100, well, I'm going to be a little more careful unless I know he's bluffing or something like that. The rest of it, roulette and craps, and backrack, you got to play streaks. So if you're playing roulette, it's just jump on red or black or odd or even, and watch what the number keeps hitting. If it keeps hitting even numbers, bet even. If it keeps hitting red or black, that's what you bet. That's the only way. I mean, what are you, psychic? You're gonna, number 27 is gonna come up. Play your streaks. Backrack, play your streaks. Banker, player. They do all the decisions. All you got to do is choose who you want to bet on, and that's done by streaks. Craps, done by streaks. The guy hit 12 numbers in a row. Well, I'm on 6 and 8s and 5s and 9s. And when they start sevening out, I played with my friend's uncle once. I met him in Vegas. What an idiot. So I'm seeing the board, right? And I'm watching it before I bet. 7 out, 7 out, 7 out. So I go and play the don't. Because the seven's hitting and it's 7 outing and nobody's getting it. And the idiot starts playing numbers. And I saw like number 9, boom, boom, 7 out. And I'm excited. I go, okay, it's still cold. And he loses money and he's upset. And I go, you're an idiot. I mean, the 7 outs were happening. You can't buck the streak, right? When black's hitting, you just keep betting black. That's why we're looking at our streaks here. I got to see what happened last night, but Boston's on a 7-game win streak. KC's on a 4-game. The Dodgers are on a 6-game losing streak, and the Pirates are on a 6-game losing streak. So we got to see if the streaks, but you bet the streak or you don't bet it. You don't bet against the streak. So even in craps, the numbers, I believe everything is streaks, but that's my belief, but it's very successful for me. Blackjack's the same. The difference in blackjack, I can't play the dealer. I can only play me. So I got to money manage my streak in blackjack. So I bet $5, let's say it's a $5 table if that exists. And as I lose, I play 5, 5, 5, 5. Then I start winning. Now I increase to 10, to 15, to 25. And now I might lose 10 hands in a row and lose $50 and win 5 hands in a row and win $100. And if ever I'm looking to make a big bet, I wait to see, like if I'm going to play blackjack and I want to make a big bet, I play a little bet first and I get blackjack or I get 20 and I win the hand. And I might play one more hand and I win that. Now I take out 500 and now I'm going to bet big, but I'm on a winning streak. You always want to make a big bet on a winning streak. And if I'm losing, I don't make the big bet. I just go back to $5, one unit, whatever that is. And that's how you do it. And you catch a few of those and, you're gold, basically. So your investment in the banks and the stocks and the bonds, all I can say is you've got to realize the dollar's worthless. So even if you do win in the stock market, you're winning dollars that are worthless, stupid. If you're in the real estate trust or you're in a annuity at the bank, you're getting monopoly money. So you've lost before you started. So if you're in an annuity and some guy came up to me at the bank, well, I'll give you a 9% annuity, and I laughed at him, but I'd still be in dollars. It's still worthless. I want to go buy gold and silver with it because it's worthless in dollars, right? So even though I get 9%, 9% of what? 9% of crap. Plus the bank can keep my money. The stock market, if I'm lucky enough to win, which I don't trust the stock market, all of a sudden I buy Amazon and it goes down $20. I just took a huge risk without knowing the game because it's fixed from Wall Street fixes it, right? So you try to avoid those situations. To win at the stock market, the only way I did it was buy gold stocks because I figured out at 10 o'clock they drop U.S. time. About 10:30, maybe 10:40, they go up, and you catch that algorithm up. That's the only way, and then you get out of it, right? So I wait till 10:30. It's dropping, and I'm like, cool, let it drop. Then I'll let it bleed out, and then now it starts. And it's going to start. It's not going to just drop, right? So there's going to be times when it starts moving up because I think it's timed. I think they do all the selling first and then they do all the buying next. So the price drops and then they buy it cheaper. And then you buy it so let's say it's $40 and it goes down to 39 at 10 o'clock. And then at 10:30, it's 38.50. Okay, now it starts going up. So I buy it at 38.50. I don't even care what the price is. I'm going up the elevator. And then as soon as it starts fading, maybe it starts dropping. It has these double dips in it. It has double dips. When it goes down and starts going up, it could dip back down. So you got to be very aware of that because it's controlled. And so if I'd buy 1,000 shares of a $40 stock's 40 grand. And if I make 70 cents, I made $700 and I say, thank you. And that's the only way I can win in these stocks because they're all price fixed. They're all bullshit. It's all controlled by, Michael Douglas and all these guys. So I really don't want to be in those. Bitcoin, we have no idea why it's going up, do we? So how do you buy it? And who has $116,000 sitting around to buy Bitcoin? Which you don't know what it is. So you therefore can't understand why it would go up or down. We know with gold, BRICS is the one buying it all. So we see the demand there. They want to buy the gold. They want to buy the silver. So therefore, I feel comfortable it's going to go up. Before BRICS, though, it didn't move. The variable is BRICS. I had a talk yesterday about technical analysis. And I said, I do use it, but I realize there's too many variables that change. So in a technical analysis is like betting on Mahomes, and you look at his last 3 years and you see, well, they're very good as a road favorite and they're very good as a dog. But as a home favorite, they're not that good because you're laying 10 points and they just want to win by 3. And so therefore, you can use the technical analysis on Mahomes, but you can't use it on Caleb because he's only been there 1 year and now the coach is different. So now you got to get all. It's got to have the variables. Got to be the quarterback and the coach, and they keep shuffling in quarterbacks and drafting them. Daniels, Bo Nix, Penix. So you got to get your trends on those. But once you have them, the trend analysis works. However, if you keep getting new quarterbacks and new coaches every year, like Tennessee this year's got Cam Ward. How can I do a technical analysis on him? That's why I say it's no good. You cannot technical analysis Cam Ward or Tennessee because that was Will Levis the last year, and he got a new coach now, and New England's got Vrabel, it's a new coach. So you can't really look at it. That's why even in gold and silver, it's now got bricks and it's got Basel 3, which was not there in 2008, and I doubt it was there in 2010. Maybe you can go back the last 3 or 4. I think you can go back to 2023, but you can't even do silver. Oh, there's a silver squeeze going on. They don't have any. You don't need a technical analysis to understand Bricks is buying silver, and the COMEX and the LBMA are out of supply of silver. I don't need a technical analysis to see that. And then I can see that, of course, silver is going to go up because of Basel 3. A variable that's changed. They don't have any silver because Bricks has been buying all of it. So I don't need a technical analysis to understand that. So as far as a silver squeeze, looking at a chart, you don't need to look at it. Oh, it's Bricks. That's changed. It's Basel 3. That's changed. This whole tariff thing. I mean, there's a lot of variables that have changed that I can't go back to 2015 and look at trends for silver and assume that's what's going to happen because those trends didn't include Bricks, didn't include Basel 3, didn't include, all this craziness. So that's why you can't use technical analysis because the variables changed. However, you can use Mahomes and Andy Reid and Joe Burrow and Josh Allen. You can use those certain trends because they are consistent for the last 3 or 4 years. You've had the quarterback and coach. So I can use those trends. I can even use Lamar, even though we already know in a big game he chokes, and in a weak game he still chokes. He blew a 10-point lead to Oakland and Cleveland. I mean, what the fuck? So you can't trust him. He's not very good. So these are the points of a technical analysis. It only works if all the constants remain, if all the variables remain constant. If you have that, you can use a technical analysis, which is basically saying what happened before will happen again. The history will repeat. Now we can see what happened with Rome, and we can see what happened with England and France, and we can see what happened with Amsterdam, where they were the lead dog, and then we can see what happened. And the argument is Ray DeLeo says, oh, they're all based on what does he call it? Not levels, but he calls it when cycles. Oh, this is the cycle. Well, that's the stupidest thing I've ever heard. There's no cycle. The Roman Empire lasted 750 years. Brits in the France were 100 years. Amsterdam, that whole thing was 50 years. Spain was 50 or 60 years. What are you talking about 100? So France was 100 years until Napoleon went to war with Waterloo, and that ended that. And then England was 100 years, but World War II happened. And they had to buy all their weapons, and they used gold for that. Well, of course, they're going to collapse. The U.S. went off the gold standard in 71. That's the collapse. We've been collapsing for 50 years. People think we're just starting to collapse. We've been collapsing since 1971 when we went off of gold. So therefore, we're in big fucking trouble. All right. So that's why you got to be careful about variables. It's good if A and B and C are the same. But as soon as they change, forget looking at cycles or forget looking at variables. It doesn't work once you change the variables. So keep that in mind. So that has to go in when you're calculating, even if you're calculating risk and reward at poker. It only works if you know the players. If new players keep showing up, you have no data on them. You got to get data on the player. So when I was in Vegas once, we were waiting to go to the airport. We had stopped and we were flying from San Diego back to Detroit, and we stopped in Vegas for a few hours. So where I'm playing poker, we're watching the football game, and then I'm playing poker after. And the one key was that I had no data on the guy. So I got ace king, and the guy makes a big bet. I don't know what I don't know. I don't have data on the guy. So I call him, and then I think a king hits the flop. So I got kings with an ace, and he makes another big bet. I don't know what he's got. I don't assume he's bluffing. So I call again, and then on the river, nothing changed, and he makes another big bet. And I don't know what he's got. So I can't really call him. I don't have enough data on him. And I have kings with an ace, but I don't know if that's any good because the guy's been betting a ton from the beginning. And normally that's not a bluff. You bluff the river because it's the only way you can win, but you don't start off on the flop betting and on the turn betting and on the river betting if you're bluffing. In my point, I didn't know what to do with it. But the risk wasn't too bad the first couple of bets, but the last bet he went all in, and I'm like, I don't know. Even though I had ace king, I really didn't know. But I made it up the next hand. I had pocket queens and made some tricky bets and checked, and the guy didn't know what I had. So he goes all in, and I go, fuck it. And I called with my queens, and I had him beat. He thought I was bluffing or had a weak ace or something. Anyway, so you've got to get the data to understand it. So sports betting is all about getting the data and then understanding the meaningful. So baseball is pitching, football is quarterback and defense, and how balanced their offense is. Philadelphia with Barkley takes away that Hurts sucks. You bet Mahomes, you bet Burrow. You can't bet Caleb. You can't bet Trevor Lawrence. So you got to know, is the quarterback any good or not? And how good's their defense? And a lot of it's scoring. Who did they beat and how did they play? So that's how you kind of come up with the factors bringing you so you can win. And in the banks, the factor is they're printing money. You're printing this to death. This has no value. And therefore, you got to get out of it. Howard, how do you know it has no value? Because I can see and read, listen, that they keep printing. They got a $37 trillion debt. We all know that. That means your dollar's fucked. You were on the petrodollar. That's gone away. The FX currency's gone away, where China's trading right with Brazil and Russia without using the U.S. dollar. So the U.S. dollar is not in demand. Everybody's de-dollarizing, so the demand for the dollar is gone. So if you understand that printing money makes it worthless, and you see all this money being, trillions of dollars here and there, and now China and Japan are not taking the treasuries, and we got to buy our own treasuries. That's all problems. And so understanding inflation is money printing, and that the money loses its value, not the prices. If you understand that, then you understand the dollar's in trouble, and then you run and buy gold and silver because of the variables have changed, where these idiots are now printing. So that's how you understand it. So in football, you realize it's the coach and the quarterback and the defense. In baseball, it's the pitcher, maybe some hitting. And basketball, it's just the star player and the defense and things like that. And you just see who's winning a lot and how they're doing it. Magic, Bird, Isaiah, Jordan, they won because they had the stars. Okay, that's what we need. Now we don't have any. The kid that won the MVP is a joke. he's not even as good as Karl Malone, right? So in the 80s, it's Magic and Bird, MVPs, Isaiah, Jordan next, Kareem, Dr. J, Moses Malone, these guys, and Drexler, and so all of a sudden, here's this guy. He couldn't even. I don't know if he'd make the starting lineup on the Lakers or the Celtics. I don't think he could have beat out Robert Parrish or McHale. He certainly wasn't going to beat out Bird to even get playing time. That's how good they were then. And I'm sure he wouldn't have beat out Worthy, and Kurt Rambis was the rebounder. So he's probably better than Rambis, but he was just the rebounder. We don't need you. We have a guy named Kareem, which he certainly wouldn't have beaten out, and Magic and Norm Nixon. He wasn't going to beat out any of those guys. So he wouldn't even have played on the Lakers or the Celtics. The Bulls he would have played on. They just had Jordan. That's why they couldn't win. The Pistons had Isaiah and Bill Laimbeer, and he's not better than Bill Laimbeer, to tell you the truth. Bill Laimbeer's a winner. They had Aguirre, they had Vinnie Johnson and Dumars. So I doubt he would have got much playing time on the Pistons because they didn't need him. They had Isaiah was a whiz, right? Dumars could hit, Vinnie could hit. And, their forwards, Aguirre, Dantley, he wasn't going to beat those guys out. And Laimbeer, he was certainly not going to beat out Laimbeer. So this guy wouldn't even have made 4 or 5 of those teams, right? And he's the MVP of this league. This league sucks. The baseball league sucks. The baseball league's all minor leaguers. The football's got a few good teams, and basketball is just dreadful. So that's where we're at now. So you got to understand what variables you're looking for. All right. Let's go to baseball. The only thing with gold and silver, we know it's not played today. They're off till tomorrow about 6 o'clock at night. And China's been dumping it early and then going back. All right, let's go to yesterday. Let's get to the results. All right, we start off with the Yankees under 9. They won 11-0. Roden against Flexen. And then I realized Flexen with his 1.47 ERA he was a reliever most of the time, so that's a bullshit ERA. So I lost the game I shouldn't have lost. Cincinnati over 9.5. That was 3-2 Colorado. That we lost, even though there was bad pitching. Detroit we lost. Skubal got killed. 12-3 Seattle. Skubal. So Detroit's so unpredictable. They didn't hit this week's Seattle pitcher, and they killed Skubal. So what the fuck? Then we have Boston. That did win. We had Boston, and Boston is now on an 8-game winning streak. So we bet Boston only because they're on the winning streak, and they won again. So we keep going with Boston. The White Sox in Cleveland, we didn't play that. Texas, Houston, we didn't play. Pitt, Minnesota, we go under. Paul Scanes goes to 4-8 with a 2.01 ERA. Unbelievable. 2-1 game. That was our big lock, 5 units. We hit that one. KC under 9. No, the Mets win 8-3, unless there was a doubleheader. Was there a doubleheader? Yeah, it's a Yankee. No. So KC, Bubik never, I don't know how he's got a low ERA. He never does it. So the Mets score 8 runs. Philadelphia, 3 units. And Philly loses to San Diego with Ranger Suarez with his 1.94 ERA. Loses. He's 7-3 with a 1.94. We lose with Ranger. And then our last game, the 49ers does win over the Dodgers 8-7. And the Dodgers are now on a 7-game losing streak. And then let's see, what did Milwaukee? And Milwaukee wins 8-3 over Washington. So We go 0-3, 0-5, 2-5, 4, and we go 4-5. Again, Skubal lets us down. Ranger Suarez gives up some runs. I mean, but that's where we're looking at it. Unit wise, 2, 4, 7, and then 7 we're even, down 5. So we went even in that. We lost. We hit the 5-unit Skeins going under. That's why we don't bet Skeins. He did lose. So if you bet Skeins to win, he don't win it. But he does allow 2 runs, and they score, and the game is under. And that's the point of Skeins or whatever. Let's look at the streaks. Boston wins. KC lost, so their 4-game winning streak is gone. Milwaukee wins, so they've now won 5 in a row. Pitt lost, they're 7 in a row. The Dodgers lost, they're 7 in a row. So most of the streaks remain. 4 of the 5 streaks remained intact. So that might be the best way to bet baseball because it's very streaky. It's 162 games. You don't know the players. They're tired. They're injured. I was reading something. Kirk Cousins, what a bullshitter. Well, my arm was hurt most of the year. What a bullshit. You're playing football. You're going to be hurt. Either you can handle it or not. But don't sit there and say, well, I played bad because my arm hurt. Well, now we're going to go with Michael Penix. I'm sure his arm hurts. I'm sure Mahomes is hurt. I'm sure Burrow is hurt. Come on, man. All right. So 7-12. The Cubs are up 1-0 on the Yankees in the first inning. Who cares? 2:10. So we got an hour for this game. Pitt goes to Minnesota. Skeins lost 2-1. We got Minnesota 135, 9.5. Mike Burrow 1-2 with the 3.63. Cole Sands 3-3 with the 4.38. But Pitt's on a 7-game losing streak, so we're going to take Minnesota. And we'll go 2 units. The other thing is when you beat Skeins, I don't know that they hit them. They won 2-1, but they could have won it in the 9th inning off the reliever. But usually if you can beat the ace, the Skeins, the Skubals, you go on from there because now you got confidence. We beat Skeins. Off we go. All right. Atlanta against St. Louis. Atlanta 115, 9.5. Aaron Bummer 1-2 with a 3.38. Eric Fetty for St. Louis 3-9, 4.78. Don't like the game, but I don't have a streak. I'll lay away. The Dodgers and the 49ers. The Dodgers 165-8. Ohtani 0-0 with the 1.5 who goes 1 inning a game. Landon Root 6-5, 3.39. But the Dodgers have lost 7 in a row, so we're going to go with the 49ers. Betting against the losing streak, 2 units. I don't care about Ohtani. He's only pitching an inning, maybe 2. Who cares? Miami against Baltimore. Again, no streak. Jansen Junk for Miami, 3-1 with the 3.12 against Trevor Rogers, 2-0 with the 1.57, who I bet is a bullpen guy. It looks like it's raining here, I guess. He pitched 6 innings, 2, 8, 5, and 6. He gave up 3 runs to Tampa, 2 to Texas, and 0 to Atlanta, Texas, and Boston. So he's very, very good or very, very bad. So I'm going to ignore that, and I don't have a streak. We're going to play Boston today on an 8-game winning streak. We bet against Pitt. We bet against the Dodgers, and then we got to bet against Atlanta. All right. So we're going to ignore Miami, Baltimore, Colorado, Cincinnati. Cincinnati minus 310.5. Huge. Bradley Blaylock 0-2 with the 12.94 against Brady Singer 7.7, 4.32. I'm just going to take Cincinnati. They got a lot of hitting. We'll go 2 units. Washington and Milwaukee. Milwaukee's on a 5-game winning streak, so we're going to take Milwaukee. Milwaukee minus 258.5. Shinisawa Gagawa 0-1 with a 1350 against Brandon Woodruff 1-0 with the 150. We're taking Milwaukee on a 5-game win streak. So we got Milwaukee, we bet against Pitt, we bet against LA, and we took Boston. So all our streaks are played. We can only lose one game with them. If the streak goes, then we get off of it. So now we're down to 4. Well, we could get new ones. I gotta check any new ones. The Mets and KC. The Mets beat a good pitcher, Bubik, yesterday. Frankie Montez for the Mets, 1-1 with the 6-1-4. Michael Lorenzen, 5-8 with the 4-6-1. This looks like an over game. So let's go over with the Jets, Jets, over 9.5. And we'll go 2 units. And they played a high-scoring game yesterday. Cleveland and the White Sox. Cleveland 150-9. Tanner Bibby 4-9 with the 4.35. Sean Burke 4-8 with the 4.44. They don't hit. I'm not going to touch this game. This looks like an over. Tampa Bay, Boston. Okay. Boston on a 8-game winning streak. Shane Baz 8-4 with the 4.34. Garrett Croquet 9-4 with the 2.39. We're going to go with Boston. We're going to go 5 units on this one. Boston at home with their best pitcher. So let's go 5. Philly, San Diego. Philly lost 4-2 yesterday with Ranger Suarez. Surprised. Normally I'd play that under, but the San Diego pitcher wasn't that good. Philly 167.5. Zach Wheeler 9-3 with a 2.17 against Hugh Darvish, who's been injured, who just came back. We're going to take Philly here. 2 units. Because we know Hugh Darvish is good, but what's he going to go through? Well, let's see what he did last game. Oh, the 4.91 doesn't make sense. He pitched 3 innings, gave up 2 runs in 3 innings, so that's why his ERA is high. But yeah, we'll lay away from that. So you get 3 innings of Hugh, but we'll take Philly because they're going to get 7 innings of Zach Wheeler. Texas, Houston 125, 6.5. Jacob deGrom 9-2 with the 2.29 against Framber Valdez, 10-4 at the 2.9. We are going to go Texas. We're going to go under 7, and we'll go 3 units. So we got 2 pitchers with Jacob deGrom's been pitching very well. Valdez at home, both pitchers under a 3 ERA. Should be low scoring, so we will bet it accordingly. Arizona and LA. Arizona 105-9. Zach Gallen 7-9 with the 5.15. Ooh. Yushi Kikuchi 3-6 with the 3.02. Probably an over, but we're going to leave it alone. And then Toronto at Oakland in the softball stadium. Toronto 140, 10.5. Kevin Gausman 6-6 with the 4.13. Jacob Lopez 2-5 with the 4.26. We didn't play the game yesterday, so I don't know what the score was. Probably an over game. Yeah, let's go over. Oakland over 10.5. Bad ERAs, good hitting teams in a very small ballpark because it's not at Oakland, it's at Sacramento or whatever. It's where their minor league team plays. And we got Seattle, Detroit in a delay. So Seattle killed them yesterday. This game has not started, so it's still a live play. We've got George Kirby with the 4.22 ERA against Casey Mize with the 2.63 ERA. Mize has been pitching well. I didn't realize he was from Auburn, so I like him a lot better. And Kirby, he's got a 4.22. Now, Detroit lost yesterday. I'm tired of, Detroit wins the series. Like that's supposed to matter. Detroit 3-4, 5 and 3. They got 3 bad hitters. And Seattle is 1, 2, 3, 4, 5, and 1 bad hitter. So money should go on Seattle, but I'm not going to play it. All right, let's walk through this. We start off with Minnesota, 2 units. The 49ers, 2 units. The Dodgers are on a 7-game losing streak. Boston, 5 units. Boston's on an 8-game winning streak, plus Croquet's pitching. Cincinnati, 2 units. They're not on anything. Milwaukee, 2 units on a 5-game winning streak. The New York Mets over 9.5, 2 units playing, I think, Colorado, and they both hit something like that. Well, who are the Mets playing? The Mets? No, it's they're playing Kansas City, so they're 2 good hitting teams. Philadelphia, 2 units. Texas under 7, 3 units. And Oakland over 10.5, 2 units. The streaks, Boston's on an 8-game win streak. Milwaukee's on a 5-game win streak. Pitt's on a 7-game losing streak. And the Dodgers are on a 7-game losing streak. So we're taking the 49ers, and Pitt's playing Minnesota. So the first 3 bets are all going streaks. Now let's see if we got new streaks. Those are the streaks from yesterday. Did we get new streaks? So all we're doing is going into Yahoo and all right, I can't get it to sit. We're just going into Yahoo and we're looking at streaks. Yankees are now on a 5-game win streak, so let's add them. But that game's already started. Boston's on an 8-gamer. We know nothing new. Nothing new in the Central. Detroit's on a 2-gamer. Houston's on a 4-game losing streak. We'll pick them up if they go 5. The National, Miami's on a 3-game losing streak. We'll pick them up at 5. Milwaukee on a 5-gamer. We've got Pittsburgh's on a 7-game losing streak. We've got the Dodgers on a 7-game losing streak. We've got. So the only new one is the Yankees are on a 5-game win streak, but they've already started. So what we're looking for is the best risk for our return. Now, in a money line, you do get different money lines. You get minus 110, you get plus 150, you get minus 200. And that's where the risk is going into it. You're betting on a better pitcher. Like Schoolville yesterday was probably minus 200, right? Not 110. That's why I like football teasers. They're all 110 to win 100. In baseball, depending on the pitcher and the team, you could be laying 250 to win 100. That's where the risk is higher. But the reward's the same. I get 100. If it's minus 110, if it's minus 150, if it's minus 200, the reward is $100. However, by taking the dog, you are rewarded where you bet 100, you win 250, or you win 150. So there are some times that you can take the underdog, and you do have a better risk reward ratio. But usually you're going against a very good pitcher. So that's baseball today. This is gambling because you could lose. Anytime you could lose, it's gambling. And the only thing that I suggest we can't lose on now that there's bricks and now that COMEX is getting blown up is gold and silver. There's really no risk in the portfolio because the demand's huge. Now, what variable can change is Brick says, yeah, we're not going on the gold. We're not going to gold backed currency. Da 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 da. Then we would have to adjust. Then maybe we profit take it if we can find other things. But with the dollar collapsing and the whole economy collapsing, uh, you've got to get out of dollars. So what you're doing is you're getting out of dollars and you're looking around. You're going, shit, I got to get out of the US dollar. Well, wait, I can't go into the euro. I can't go into the British pound. I can't go into the Chinese yuan or the ruble or all that. You can't go into it. All the dollars are killed. Well, I'll go into the stock market. Well, you can't go in, but that's all dollars. Well, I'll go into real estate trust. Well, wait, that's all dollars. I'll go into Bitcoin. And that's what's happening, I believe, is the people think Bitcoin's a good investment. They think it's real. They don't know they're walking into a trap because it's not backed by anything. There's no difference between paper stocks and Bitcoin. It's the same. It's all going to collapse. But people don't understand it. Well, it's 117. Why are you in it? Because it's going up. What kind of fucking reason is that? Why are you in Bitcoin? Because I get 15% of my money. But do you know how you get it? No, but I don't care as long as I get it. It's better than the bank. And that's the thing with Bitcoin. You don't understand it. You shouldn't be in it, but you don't understand it. You just see, oh, now it's 117. It's going to the moon. It's going to be $1 million. Okay. But your dollars aren't going to be worth anything. You're missing the point. You're missing the gold and silver monkey that's right here that you should be into. So you're missing that. And that's really the problem. You get out of Bitcoin because it's not backed by anything. It's not, Bitcoin is the same thing as being in these two little fellows. They're not worth it. There's no value. There's no value in Bitcoin. The fact is it's $1 or 117,000. There's no value in it. At least in Amazon or Apple, you can look at the balance sheet and go, yeah, they make money. And so therefore it's worth more. And I think a lot of the US stocks are up there because all the Europeans have nowhere to go with their money, put it in the US stock market. And the fact that these stocks are now global, Apple sells iPhones for the whole world. I know my friends in different countries, get me an iPhone. Are you kidding me? Get your own iPhone. I'm not going to waste. I don't buy an iPhone for myself. It's a waste of money. I don't need a phone. I got a phone, and they're tracking you and everything you say on there. They know it's terrible. So you don't really want to be that. But that's why the Apple price is up because it's worldwide. It's no more. It's a U.S. company. It's a worldwide, global company. And that's why these globalists are like, well, we won't have countries. We'll just sell all over the world, which is what the internet's done. So the internet's killed stores where you might go to the mall. You're not doing that anymore. You're just going to Amazon and buying. Or, I mean, I prefer the mall. Like this shirt I just got. Well, I can try it on and see if it fits. I can't do that online. So clothes, I'm not crazy about buying online, but that's the point of it. Like I just went up July 4th to the outlet mall, and they have a polo up there, and a Brooks Brothers, and a Tommy Hilfiger, and a Nautica, and some golf and other stuff. So they have stuff up there. Anyway, that's the point of it. You're really diversifying out of anything related to paper. Even your house is going to lose all its value. Anything valued in dollars, and if the dollar goes out, you're fucked. So again, what are you going to do with Bitcoin when the dollar goes out? Let's say it's 200,000. It's going to be worthless because the 200,000 isn't worth anything in American dollars, and that's how it's priced. So my friend goes, well, but Bitcoin it'll have a different price. It's not, it'll have a gold price. Nobody with gold is going to buy Bitcoin. Gold I have in my hand, I know what it is. Bitcoin, I have no. It's not real. And that's my problem with Bitcoin is I'm always leery of things that aren't real that I can't see and touch. I am not investing. If you told me to buy a Rolex, but I actually didn't get the watch and they just like it's a digital watch, but it's $70,000, I tell them to go fuck themselves. If I'm going to buy a Rolex, I want to wear it. I want to be able to look at it, see the colors, and put it on my wrist. And if I can't do that, it's all a Ponzi scheme. You don't think it's a Ponzi scheme because it's worth, well, if somebody's betting putting 117,000 in, who the hell has 117,000 and is buying Bitcoin? Show me these people. I get when people bought it when it was $5,000 and they were just monkeying it. They bought one or two, but even that was a very risky investment because you didn't know where it was going. And even now, you don't really know where it's going. It could go to zero. It could go to 200,000. You don't know. You have no way of knowing. It's not based on supply and demand because it's certainly not real. So you can't, like, I can show you my whiskey. I can show you my Mano card. And, oh, yeah, I'd like to get one of those. Why would you want a Bitcoin? It's not real. It's not a coin. It's not backed by anything. It's not digital gold. How could it be digital gold? What kind of joke is that? Gold's gold. Gold I can see. Physical gold. So that's kind of all related in risk. You could lose, but you got to understand the game. Oh, wait, if I play craps, yeah, so if I bet the pass line and the 7 comes out, I lose. Okay, there's risk. Oh, if the dealer wins in blackjack, I lose. Oh, okay. So that's the game. Poker. Oh, the guy had a full house. I got 2 pair. I lose. There's winning and there's losing, and you got to understand the risk of it and risk reward. And, so what's your risk in Bitcoin? The fact it's not real. If you could see it and hold it and go, well, that's cool. I do see these gold Bitcoins. Why are they gold? So I see an ounce of gold and it's got a B on it as if it's Bitcoin. And it's just funny. It's like, oh, they're trying to make it into gold, but it's not. Anyway, so right now, gold and silver is your best friends because they are not, there's no risk. There is no risk of it going down once we kind of kill COMEX. So COMEX is dying with Basel III. BRICS is buying gold and silver, as the rest of the world soon will be. Once we get the Europeans in and the UK, we already got Russia and China buying it hand over fist, especially China. And I love when these guys say, well, China's got 2,900 tons of it. Bullshit. They got 60,000 tons. Russia's got over 25,000. India's got 30. Saudi Arabia is probably in the 20s. Brazil's probably right there. Don't tell me they got, well, they're central bank, but we can't really collaborate the real findings. So you're quoting something that you don't even know the right number because the China central bank doesn't report. They're digging it out of the ground and holding it, and they're buying right out of the mines, the silver mines. How much silver does China have? You don't know. They just went to a mine and took 1,000 tons out of the mine. You don't know what they got. You don't know. They got 1,000 tons of silver. They probably got 20, 30,000 tons. You don't know, and that's the point. And it's gone from COMEX. That much we think we know. There's no gold in Fort Knox. We think we know, but they won't show us. So that leads us to assume if you're not showing us that you have 8,000 tons in gold, you don't have it. Because if you had it, you'd show it. You say, here it is, because there's no risk. You got armed guards in the military there. What are you worried about? We assume there's 8,000 tons. So if you're going to get attacked, you're going to get attacked anyway. So that, if you had it, you'd show it, you'd prove it, and you can't, so you don't have it. So that's the whole thing. Everything is risk. It's got to make sense to you. Why is BRICS? Why is COMEX? Why is Bitcoin going up? Why is BRICS buying all the gold? Oh, because the dollar's going out. Oh, Japan just just sold 1.7 trillion of U.S. bonds. China's dumping. Uh, most of Europe's dumping. Nobody's buying the bonds. Well, why not? Ask the why. Ask the why question. Why is nobody buying the bonds? Because the dollar is worthless. Well, wait, what happens if the dollar's worthless? Well, if you own it, it's not worth anything. So you're saying this isn't worth anything. No, it's not. That's why it's ripped. It's maybe worth a penny, this dollar. The $100 bill is maybe worth $1. Go to the grocery store. I just spent $80 there the other day, and it was like after 3 items, I had bought a chicken thing, my avocados. There's a few other things I think I got some grass-fed hamburgers, and it was like 4 or 5 items into it. I was already at like $30. I mean, it's crazy, but that's what you got to understand. The dollar has no value. Inflation is printing the dollars, period, not prices. Just because your costs go up doesn't mean you can raise prices. That's really bad. You can't raise the price unless the market will allow it. There's a risk. You're running a restaurant. You're selling ribs. You have a risk because with the inflation, the dollar's not worth anything. So my costs are going up, but I can't just raise prices to my customers. They won't pay it. So I'm really fucked. So how much risk do I have owning a restaurant? So you got risk on gambling, baseball, football. So there's a lot of risk, and you're looking for the best risk and reward. So if I bet Mahomes, the reward's still 110 to win 100. Betting Trevor Lawrence 110 to win 100. Wait a minute, but Trevor Lawrence sucks, and Mahomes is a great player. So why wouldn't I just bet on Mahomes? Oh, the point spread. Oh, I'll do a teaser, and that'll knock the line down. Well, look at the first game. They're at Brazil. They're playing San Diego. They're 2.5-point favorites. So I can get Mahomes. So here's week one's bet. Right. So you got Kansas City 2.5 over San Diego in Brazil. So what's the risk on San Diego not only winning, but they got to win by 3? You got Kansas City in 3.5. You got Mahomes plus 3.5. The odds in you losing that are probably 2%. They can lose the game, but you got 3.5. San Diego's not going to blow them out. They don't have that type of offense. Their defense is okay. Kansas City's defense is probably better, and they got Mahomes, the equalizer. So the odds on that versus Jacksonville is 2.5 and 46.5 over Carolina. You're going to trust Trevor Lawrence? No, you could get Trevor Lawrence plus 3.5. And the odds on you winning that bet are very slim because he sucks. But so does Bryce Young on Carolina. He ain't going to beat him. So you got 2 shit quarterbacks in that game who you have no idea what's going to happen. The defense will probably win the game. It's probably an under because both quarterbacks stink. But would you rather have Mahomes in 3.5? You get paid. You're going to bet 110. You win 100. I win 100 with KC, or I win 100 with Jacksonville. The same reward. It's the same, but the risk is the quarterback. I have more risk with Trevor Lawrence or Bryce Young than I have with Mahomes. And that's the key. That's why we look for you bet the stars, you bet the A teams, you bet against the Z teams. That's what you're looking for. That's what I look for. And I understand that that's what works. That's why you bet on Joe Montana. You bet on Brady, and you bet on Aaron Rodgers, Drew Brees. That's why you bet on those guys. Notice I didn't say Peyton Manning. That's the point, because they know how to win. That's why I sit there and talk bad about Jared Goff. He doesn't know how to win. He's a loser. He's a choke. At the end of the day, he can't win the big game. So when you ask me about him or Lamar, I say these guys suck. Literally, yeah, they're football players, but you can't trust them to make a bet where I can trust Mahomes and Burrow and Josh Allen. and even Aaron Rodgers. I can trust them. I can trust Stafford, maybe even Brock Purdy with McCaffrey. I can trust Barkley at Philadelphia and that defense. I can trust them. They've won. They've showed me. However, I cannot trust Jared Goff. He's never won anything that was a big game. He lost at Cal. He lost at the Rams. And now he's lost at the Lions. I mean, you got to come to reality. He blew a 17-point lead in the championship game that would have went to the Super Bowl. And so he choked there. And then he choked last year to Jaden Daniels, but Washington had no defense. He threw 4 picks and a fumble and a pick 6 just before half. Are you kidding me? So this is my point. That's why we look at quarterbacks. Are they bringing us the money? And we look at Lamar, and he's cost us. You blew a 10-point lead to Oakland. You blew a 10-point lead to Cleveland in the fourth quarter with 5 minutes left. Are you kidding me? So this is why you get away from them. Mahomes doesn't do that. Josh Allen doesn't do that very, very often. Now, Josh Allen loses to Mahomes, but he beat, like last year, he beat Lamar, and he's good in the playoffs until he faces Mahomes. So you understand that. Joe Burrow is the only one that can beat Mahomes, and he's beaten him like 3 times. And so you get Joe Burrow as a dog, and you're all over him. He's a winner. He won in college. He won us a ton of money that one year when every game went over. It was like a joke, but we didn't even know who Chase and Jefferson were. And yes, Chase is better than Jefferson because he can break tackles and he can take the ball 60 yards. Jefferson doesn't do that. So that's really what you're looking for. You're looking for it in the pitchers in baseball, but it didn't happen yesterday. Scanes got the win on the under, but Skubal didn't show up. And Max Fried didn't pitch yesterday. I think there was DeGrom we got today. So we're taking Texas under 7, and we'll see if he normally shows up. And that's what you're looking for in the big moments, who shows up. And if they don't show up, they're a choker because they're good. Golf, we question he's good because he's never shown up in a big moment. The Super Bowl. It was all based on the running back, Nick Chubb, or no, not Nick Chubb, the other guy from Georgia. Anyway, it's funny. Sometimes I remember his name and now I can't. He only was good because of the running back. And the running back got hurt or didn't do anything against New England, and it was up to Golf. And as I'm watching the highlights or these games from Detroit, 90% of his passes are play action. He play actions pass to freeze the linebacker, and then he's good. But when he has to drop back, 5 interceptions. And teams know that. They're getting him off the spot, and he's in trouble. Houston did it. The Rams were doing it. The Niners did it in the second half. Washington did it last year. If Philly would have got a hold of him, he'd have thrown 10 interceptions because the way they handled Mahomes, Golf had no chance against Philadelphia. So you think, they lost to Washington. Yeah, they lost to Washington with that defense. Pretty pathetic. And, the Lions defense was injured. Okay, let's go back to the 49er game 2 years ago. The Lions, Hutchinson did play in that game, as did most of their starters played in that game. They gave up 34 points to Brock Purdy. Okay, they gave up 3 touchdowns to McCaffrey. So wait a minute. The excuse that the defense was injured 2 years ago didn't work because they weren't injured against the Niners. They got killed. So not buying that bullshit. I don't buy Hutchinson will be back until November. We'll see. Takes a year for 2 broken legs to come back. Yeah. Anyway, so that's what you're basing it on is how are they in the clutch? And if they're not good, I don't know why Detroit keeps Golf. And then I keep hearing this Hendon Hooker. Why is everybody on Hendon Hooker? We got Golf. That's exactly why. We've got Golf who cannot perform in the pressure, and we got Hooker who can. And that's why I keep stressing the 50-49 win over Alabama, where he was sensational. He couldn't do good against Georgia because he never had time to set up. But against Alabama, with all their defense, and half of them are on the Lions now, he beat them. That's why Hendon Hooker, because in the clutch, he won. In the clutch, Goff loses. That's why you go to Hendon Hooker. And these radio guys, oh, Goff's an all-pro. Bullshit, he's an all-pro. But he's not a winner. It's just bear it out. In college, at the Niners, and here, he's not a winner. Not my fault. I'm only pointing it out. If he will, look at Stafford. The ironic thing is the Lions traded Stafford for Goff. The Lions would have won the Super Bowl with Stafford 2 years ago. When they got to the Niners with this offense, Stafford would be lighting it up. Stafford would have won 2 Super Bowls. He'd have won 2 years ago, and he might have beaten them last year. He played Philly pretty tough. But with those weapons, if you would have given Stafford these weapons and this line, Stafford would have won you 2 Super Bowls. And that's the ironic twist. We got rid of him, and we got Goff. And we're making Goff look good, and he's not. Todd Gurley, that's the running back. So he didn't do anything. Todd Gurley ran for like 1,500 yards. That's why the Rams won. And when I don't think he played well in the Super Bowl against New England, they lost 13-3. What did Goff? Goff didn't do anything. He just play action pass. New England got him off the spot because Belichick could figure that out. And Brady just methodically beat him 13-3. Even though they had Aaron Donald, that's why the score was low. But look what New England did to him. And then a couple years later, look what he didn't do anything in the playoffs. And that's why. But the ironic twist is if the Lions had Stafford now, they would have won the Super Bowl 2 years ago. When they blew the 17-point lead to the Niners, Stafford would have won the game unless the coach was still with his head up his ass going for a 4th down every time. But if he would have just kicked field goals, the Lions would have won the Super Bowl with Stafford and probably would have been really good last year to maybe they would have beat Washington. I don't think they could have beat Philadelphia even with Stafford. But it's ironic. You let the better quarterback go, Stafford, who everybody thought wasn't that good, and you think Goff is good. That's the joke. Just like thinking that C.J. Stroud's any good. No, he's not. No. C.J. Stroud's a typical Ohio State quarterback. Just like if you think Fields is any good. No, he's not. Get that out of your mind. Fields is not good. C.J. Stroud's not good. Any of these Alabama, Tua or Mac Jones or Jalen Hurts are not good. They win Philly wins because of their defense and Barkley. They don't win because of Hurts. Anyway, it all comes back to what you're looking at for risk and reward. And this, you have far less risk of losing the bet with Philly's defense and Barkley, even with Stafford, with Mahomes, with Burrow. You might lose with Burrow, but you're going to bet them over. Now, hopefully their defense got better, and I see them getting pissed. In the first week, they got Cleveland. They're at Cleveland laying 5.5. There's no way they're losing even with Burrow against whoever the hell Cleveland has. Flacco, Kenny Pickett sucks. The best quarterback they got is going to be the Dylan Gabriel from Oregon, not Prime Jr. What Prime Jr. doing? They're wasting time with Prime Jr., and they're probably wasting time with Pickett. We've seen Pickett. He sucks. Prime Jr., what are you wasting your time? Dylan Gabriel, we saw, looks really good at Oregon. And Flacco's okay just for the few games to get Gabriel up to speed. But you're wasting time with 4 quarterbacks. Who needs 4 quarterbacks? And 2 of them suck. So look for Burrow to be pissed and Chase and T. Higgins. They all got their contracts. Now look out. They'll just – when I need a play, I hit Chase. He goes 60 yards. Nobody can touch him, gets a touchdown. That's less risk, but the same reward. If I tease Kansas City and Cincinnati, it's the same reward if I tease Jacksonville and Tennessee. But I got far more risk betting Jacksonville and Tennessee than I do betting Philadelphia or Cincinnati or Kansas City or the Buffalo game over. There's a lot of risk betting Buffalo, Baltimore, because Lamar couldn't do well and Allen will do well. Should be very high scoring. So I have more risk taking Buffalo, but I have very low risk, if any risk, betting the game over because we know both quarterbacks can score. We just know Lamar won't win. He might win this game, but he won't win big games. This isn't a big game. This is week one. And that's really what you're looking at. You're looking at who comes through under the pressure and wins the game for us. Joe Burrow, he's number one in my line. And then you got Mahomes. I'm not sure about Herbert. I like Bo Nix, but I like Sean Payton better. And Penix, I know he showed up. He beat Oregon twice that year when they went to the title game. Now, he didn't choke against Michigan because they ran the ball down their throat. Michigan scored on 4 40-yard running plays. Well, that's not Penix. He didn't throw any picks. So it wasn't – Penix really didn't, have a chance in that game. But he did beat Texas, and he beat Oregon twice, one in the regular season, one in the Pac-12 championship to get to the playoff. So Bo Nix, but it wasn't Bo Nix's fault. He did put up 35 points. So he's okay in the clutch. Penix's star, Jalen Daniels. Did he beat Alabama? I think he might have, but he was very good in the clutch. He put up 40 points. Or he got hurt in that one game. The guy cheap shotted him and hit him in the chin. But they had 30 points when he did it. So he didn't choke. And that's really what you're looking for. We can bet on Daniels, and we can bet on Bo Nix, and we can bet on Penix. I keep hearing Drake May things like, are you fucking kidding me? What has Drake May done that you would think you can bet on him? He didn't do anything in North Carolina. Oh, he's a running quarterback. Well, him and Lamar can go stand outside because when the pressure's on, he didn't do anything. They didn't win a lot of games, New England. They're not going to win a lot of games this year. He's not a winner because he can't throw. He can run, but now they're getting wide. They know how to defend Lamar. They're going to defend Drake May the same way. Buffalo will know how to defend him. The Jets suck. Miami sucks. So he might have big games there, but against any decent defense, he's not going to show up. They won't let him run. C.J. Stroud just wants to roll out to the right and throw the ball back across his body. Well, they figured out. Now they're waiting for him on the right sideline, and they're waiting for him 30 yards down the field to intercept his little passes like that. So anyway, that's really what you're looking for. You're trying to take the risk out, especially in football. It's the same reward. In baseball, the risk varies on the money line, but the reward's the same. You bet 110 to win 100. You bet 200 to win 100. You have a little bit more risk, but the reward's still the $100. So, I want to bet on Scooble. I want to bet on Skeins. Neither of them win a lot, but they keep the games under usually. The Tigers yesterday gave up 7 runs. Again, this new guy they brought in stinks. That's twice he's given up like 7 runs in games. And the manager's so stupid, he doesn't pull him. I mean, the guy's hit. Get him out of the game. He can't. Obviously, he has no pitches. He can't. They keep hitting him. Get him out of the fucking game. Anyway, that's what you're looking for. You're looking for it in the dollar, in the stock market. If you don't realize that that's totally price fixed, you're in trouble. The bond market's terrible because the dollar's not worth anything. So the whole key is understanding it. And so if you understand the dollar's gone and the euro's gone, you got to get out of dollars. And that's what I did about 5 years ago. Biden started doing these tax and spending bills and COVID. And as soon as I saw that, I got the hell out. I said, here's the inflation. They're printing money. There's $5 trillion. There is an effect to the cause. You can't just print $5 trillion and not have an effect to it. So that's what you're understanding. There is an effect to it. And therefore, you've got to, it's just like the Titanic. It's sinking. What do I do? So you're quickly problem solving. Well, the boat's going to sink. I'm going to die and be on the bottom of the Atlantic. Or how do I solve the problem? Get on a lifeboat. Well, that's what we're doing now. The problem is the dollar's worthless, but so is all the other dollars. So what do? I I problem solve it. I get out of it, and I go to the one place that I don't have risk, and that's gold and silver. And even though gold and silver hasn't done what Bitcoin's done yet, that's where it's heading. It will. It's just on the elevator ride. And that's what you got to understand. You're back when Bitcoin was $1,000 a coin, whatever it is. It's 1,000, and you can see it ended up. It's 100,000. That's where gold and silver are. They're there, and they're about to fly. But the difference is they're real. You can hold them only by physical. Get out of the banks. You have to get out of the banks in the stock market. How the stock market's 44,000 when everybody's selling? How can this be? The foreigners are pulling their stocks. You got Bezos and Buffet selling billions of dollars of stock, and yet the stock market's up 200. What? How can that possibly happen? That's where price fixing is. They're printing the money that's worthless and dumping it in the stock market. And a lot of it's the 401ks you get at work. You invest, they give you 5%, and then that money goes into the stock market. Very dangerous. Be aware, be smart, ask questions. Don't be afraid to ask questions and find the answers. That's how you learn. That's how we do it in my class. All right, that be it. I'm going to come back with maybe the Mountain West or Conference USA later. I hear it raining out, so I'm going to go probably to the pool. I don't know what I'm doing for dinner, and then probably maybe do a class in the afternoon or in the evening. But I want to get these classes out. Anyway, so that's what's going on. Have a good day. www.teaserking.com. You can get my email and talk to me. And anyway, thanks. I hope you learned. If you didn't learn, ask me. But I try to explain it at a very good level where you go, oh, that makes sense. Because if I can't teach you, then what's the point? I hate when these guys like Rickards and Rick Rule come on and you watch them and you don't learn. Even Mark McGuire, I'm like, what the hell is he talking about? The rinse cycle. Well, there's no rinse cycle in economics. And you try to figure out what they're talking about or alligator, and you're like, you guys are wasting time because you can't explain what you're saying. It's worthless. It's useless. You must be able for the audience to understand and learn from it. Anyway, that's what's going on. And have a good day. What are we at? July 12th. We got another couple weeks, and then we got the Hall of Fame game, and then the NFL practices, and we start getting training camp. Then the end of August, we go live with college football. So we're getting there. We're getting real close. Prices, the only price I'm going to change is the class. It was $25 in a regular class last year. I'm going to raise that probably to $75. And that's it. But my other picking, all that, the year and the week will stay the same. You're welcome, Ryan. You have a good day and enjoy. And just, if you got questions, you got my email. But anyway, you're welcome. And again, I'm just trying to teach you things that you just don't know how to think of. And a lot of you guys, I'm not saying you're not smart. You just don't know, do you think of things that way? And that's, if you can think of things that way, and it goes for women and it goes for everything else, just observe and watch and try to understand it. All right. Have a good day. Off to the pool in about an hour. All right. Take care, everybody. www.teaserking.com.